How's everybody doing? Welcome back to another episode of the Banker Next Door. I'm your host, Dr. Joe Berquist. Today, I wanted to talk to everybody about the Zelle payment network. I saw a great article in Banking Drive that I wanted to share with everybody. I will bring that up here real quick. So this was called Why Small Banks May Shun Zelle. So a lot of talk and chatter. I covered some stuff earlier this week in the most recent installment of the crypto episode about how the new crypto regulation, the passage of the Genius Act, and how this could affect, just banks using crypto. A lot of the big banks, Bank of America, JP Morgan Chase, talking about how they may get into the stablecoin space and what some of the other aspects of that may be. Would they create another system similar to Zelle? And that got a lot of people talking about, well, hey, maybe they might do that. But then it also posed the question of, well, is Zelle really that great of a system? And then I saw this article and I said, this is great. I have to cover this, basically. Basically you have three. What is Zelle? Okay. Zelle is a peer-to-peer payment platform, basically instant payments, P2P. There are three big players in the space. Obviously, PayPal has Venmo. Block, formerly known as Square, has Cashapp. And then you've got big banks. Basically, all the big banks got together, started this company called Early Warning Systems. Early Warning Systems owns Zelle and then puts out the Zelle network. So a lot of the bigger banks are using Zelle, but a lot of the smaller banks in the country have not adopted Zelle, and thus making Zelle as a payment platform a distant third player compared to PayPal and Cashapp, or I'm sorry, Venmo. I'll say Venmo and Cashapp. So with that setting the stage, let's now take a look at this article here. So why small banks may shun Zelle. So the peer-to-peer payment network charges comparatively higher transaction rates, but also offers the potential for new customers, consultants say. So community banks represent an untapped area of growth for the Zelle peer-to-peer payment platform, but many of those small financial institutions might be reluctant to work with the network, industry consultants said. So Zelle parent company Early Warning Services announced Monday that it added 178 banks and credit unions to the payment platform in the first quarter of 2025 and at the last quarter of 2024, bringing the total to around 2,300. So that figure represents just over a quarter of the roughly 8,800 federally insured banks and credit unions in the U.S., according to the latest data from the Federal Deposit Insurance Corp and the National Credit Union Administration. 7 of the nation's largest banks, JP Morgan Chase, Wells Fargo, Bank of America, PNC, Truist, U.S. Bank, and Capital One, hold ownership stakes in the network, and smaller community banks represent a business line Zelle can chase. But those institutions face a difficult choice when deciding whether or not to join the P2P payment platform, said Richard Crone, CEO of Crone Consulting. Customers want access to real-time payment networks like Zelle, but the network charges relatively high rates, he said. From our consulting experience, we have seen the prices vary between 25 cents a transaction all the way up to 90 cents a transaction, Crone said in an interview Tuesday. To put that in perspective, for any one of these banks or credit unions to process a paper check, that's only 5 to 15 cents. The 7 banks that own Early Warning Services likely pay lower rates, he added. But banks that don't work with Zelle are missing out on potential customers, he said. So Crone Consulting research shows that new account openings are 5 to 15% higher at banks that offer a peer-to-peer payment platform like Zelle compared to those that don't, Crone said. On the flip side, EWS is facing its own pressures. So the company recently offered up the Zelle network to the Treasury Department as a way to accept payments from taxpayers and send out tax refunds, eliminating the need for paper checks. If they want to pick that up, they need to get every bank they can. Tony D. Sanctis, Senior Director of Payments for the consulting firm Cornerstone Advisors. I know Tony. He's a fantastic guy. If anybody has a chance to follow him on LinkedIn, I highly suggest that because he does put up some great stuff. Cornerstone Advisors is also a great firm, too. Check them. I've covered many of their reports already. Sorry, sidebar. It's important for them to be able to say, we have 99% penetration into federal funding recipients, which is I'm sure that they are trying to get. So transactions on the Zelle network also gives early warning services access to troves of customer data that it can use to power emerging payment technologies like agentic artificial intelligence bots and digital wallets that make purchase recommendations for consumers, or in some cases do their shopping for them, Crone said. To compete in agentic payments, early warning must match Visa and MasterCard's issuer penetration or risk being bypassed entirely by AI-powered agentic wallets, he said. And early warning services spokesperson declined to comment on the company's pricing or goals, but pointed to a 2022 joint study from EWS and the analytics firm Curinos that concluded that Zelle drives customer engagement for financial institutions that use the payment platform. New users of Zelle made nearly 3 times as many debit transactions in the first year of using the service compared to non-Zelle users, the study found. Our partnership with community banks and credit unions is deeply valuable to us. It helps banks and credit unions do what they do best, stay close to their customers and members, and continue to deliver value, even in uncertain times. Zelle General Manager Denise Leonhard said in a Monday news release. Democrats in Congress and consumer advocates have admonished Zelle for allowing scams and fraud to flourish on its platform. Yes, this is the key part that I was waiting to get to. Obviously, they didn't get this till toward the end here. The peer-to-peer payments services has been the subject of congressional hearings and investigations, and its executives have appeared before the Senate committees to discuss what they are doing to protect users. The company, for its part, has defended its practices, telling lawmakers that it warns users not to send money to anyone unless they are certain of the recipient's identity. Company executives and spokespeople frequently cite internal data that shows that 99.95% of transactions on the platform do not involve scams or fraud. Nevertheless, some of the 7 banks that own EWS have taken steps to address scams and fraud. JP Morgan, for example, announced in February that it would no longer process payments for transactions that originate on social media platforms like Facebook. So, yes, so first of all, so if I'm a small community bank, say I'm a $2 billion bank, and I really want to get access because my customers really want this. Well, the 2 major things you have to look at is the contract, the pricing, and then you have to consider the ramifications, the fraud issue. The fraud issue is ginormous, and I would say it is a much bigger issue than the cost of the system itself. Now, look, I will say this. I think what you're seeing there, what's happening there, is that the big banks got together. They created EWS, they created the Zelle payment platform, but they wanted to control it, right? They wanted to get 90% of the action. They didn't want smaller banks to get in on it. They didn't want smaller banks to, they want to say like, oh yeah, sure, we want to give them access, but they basically price them out. And I think in a certain respect, that's now coming back to bite them a little bit, because as we saw here, they want to get access to, what does it say here? Like, the company recently offered up the Zelle network to the Treasury Department as a way to accept payments from taxpayers and send out tax refunds. Right now, I would want no part of that. I would not want any part of that. Given the fact that the fraud that's on there, and they're basically, look, they could sit there and say that, oh, 99.95% of our transactions are fine, whatever. Blah. They could say that, but they haven't satisfactorily proven that to anybody. And from the numbers that I've seen from different articles and different things out there, I mean, their fraud is a huge problem. It's a huge problem on the platform. I would not, like I said, I would not feel comfortable. I hope the Treasury Department would not do that right now, because I think that would be a colossal disaster at this point in time. So that's one thing. But the other thing is, they don't have the participation from enough banks to even pull that off. Like, they've got, a little over probably a quarter to a third of the banks in the country right now, between banks and credit unions. Like, yeah, they don't have anywhere near enough adoption. So what can they do? What can they do to change this? Well, they could obviously drop these fees dramatically, which, again, why wouldn't you? Because if you could get 8,000 banks to sign up, that therein unlocks your problem with the data that you need to compete with this agentic artificial intelligence. So, you need the data, and obviously the volume, the massive amount of volume will make up for the reduction in the fees. So again, why wouldn't you do that? And then if you want to truly sell the treasury on this whole thing with the tax returns, again, you need all these banks. So I think they could do two big things. They could drop their prices, and then they could, they could drop the prices, and then they could really work on the fraud thing. They could really put more money and more resources into addressing the fraud issue, and really try to go after trying to correct that as much as they could. So again, if they do that, then I think they could see massive adoption from a lot of banks, but we'll see. And then also too, I just want to point out real quick. So when you look at, like, take Block, for example, and take Cash App, I think Block strategy is really good. I think what they do, they come in, you open an account, they give you a debit card, they sign you up to Cash App, and then they make an offer and say, hey, do you need a business loan? So if you're a small business customer, you come in, you open an account, you get a debit card, you get Cash App right away, and then you get access to a small business loan of, I wouldn't say, I don't know what the amount is, but maybe it's something up to like 50,000 or something like that. And that is a very clever way to do. I think it's great. Now you think of a bank, can a bank match that strategy? If you're a $5 billion bank, you might be able to offer a small loan up to 50,000 if you've got some kind of automated loan system in place. But then that also depends on how good's the automated system. Do you still have humans making the final decision there? What is the ultimate turnaround time? You could certainly give them an account. You could give them a debit card. How long does it take to open that account? Can they do it online? Do they need to come in person? And then, do you have a P2P platform to offer them? If you're not on Zelle, you don't. So, again, it could be very difficult for a small bank to kind of mirror or match that strategy at the moment. But if these guys are willing to work on this, like I said, if they're willing to, dramatically reduce these fees and work on the fraud, I think this whole thing could change dramatically. But again, I hope this just provides some kind of insight to people who might be sitting there wondering, well, why is my small bank or why is my credit union, Zelle's out there, why aren't they signing up? Why aren't they doing this? Well, there you go. Now you have your answers. Now you understand a little bit better as to why a lot of banks out there have not adopted the Zelle network just yet. So like I said, this was really interesting. It was really a topic that I wanted to cover. I will have more, I'm sure, on, just updates and changes to the whole peer-to-peer payment networks out there. Like I said, I hope people find this interesting. But with that, I will wrap up by saying, if you like this episode, please make sure to like, share, and subscribe, as that really helps the channel. Remember, we're on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. Make sure to check out some of the other content on the channel. And do not forget BND Strategy Room, our main show on the channel, our live stream that we do every Saturday night on YouTube. I am working on trying to expand that to some other platforms, which I will have more updates for people soon. But if you haven't checked out the BND Strategy Room live stream show, please check that out like I said, Saturday night at 8 p.m. on YouTube live. Come check it out. Come hang out with me for a couple hours and get all of the latest weekly banking news and updates and all the good fun stuff that's going on in the world of banking and finance. But with that, I hope everyone has a great day out there. Thanks for listening, and I will see you again real soon. Thanks a lot.